Okay. Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones on a 5-minute chart. Just bring this down here so you can see what charts we're looking at. And I think the important two things here are that our so-called rally couldn't find and maintain support on the 12,100, and now we're back down at the 12,000 here, but we're under that now, making a new low. So this is the first retest here. I would imagine we'll see more. We'll probably see some sort of effort into this area down here before we see another retest here. So it will be interesting to see the second retest if it holds. If it does hold, then if it holds in place, we'll see a bigger picture unfold to the downside. To the downside, the levels are the first sort of real level we come across is the 11,800, a bit further down still, down here, and then the next medium level, which is 11,500, which is a bit of an old low, by the way. So it will be a target point for many analysts. So we'll see how we go, but one step at a time. And so the 12,000 will probably experience another retest, and for a bounce from the 11.9 down here, or group 1 in here, another retest back to here, and then likely to fold over down through here. And if that is the case, then we need to work with 11,800. Of course, being down here after this retest here and failing through down here would put our local market under or working with the 4,500, which is significant as well. The 4,500 is essentially halfway between 4,000 and 5,000. It's the midpoint there, the 4,500, and if that becomes resistance, then that will end up at 4.3 would be the next level there. Looking at the S&P 500, it's a bit of a messy, squashed up 30-minute chart here, but essentially looking down for a wave 3 low into this particular sort of area through here, and we'll be looking at that in 5 waves. The 1,272 here, I've pointed out a few times that excuse me, it will become an important number in terms of support and resistance, and we can expect the market not only for it to bounce around it here, but also further over in the piece as well over here. So it will be this whole group 2 area here will be significant, especially when we come back into wave 4 at this end over here. So we are looking for a bounce back into the 1250 here for wave 3, and then back over into this area over here, and then down from that area there. So in the bigger picture still, we're still looking for a move further down. So we've got down for 1, back for 2. This is the third wave unfolding. We're looking for the low of that, perhaps around this particular level here. But essentially, once this moves actually through here, and then comes back up and retests this whole area through here, and that fails, then we're on our way down to the 12.2 mark at that point there. So fair way to go, but certainly the weekly momentum and the monthly momentum would be topping out as the weekly is rolling over. So we've got oversold daily momentum, and on top of that we've got weekly momentum coming down on top of that as well. So plenty to the downside there, as we have been expecting for quite some time, and it was just really all about how much would it rally off the 12,000 for the Dow Jones. Our local market here is still, this is the SPY here, I think. Yep, futures. So we're just looking at, it's been a bit of a struggle really, because we knew that coming down to the 4.5 here, going way back over here at the beginning of the month, and now we're sort of the 10th. So, we knew that there was support on this level here, and we knew that we'd get some sort of rally, but we're getting this sort of sideways correction through here. But I think in the bigger picture for all of this is the 4.5 here becoming the resistance here. That's the key. That's the key thing. It was just really a matter of how much bounce we're going to get over this, and I have to say that we may not even be over the bounce yet, because we were looking at this move up here being an A wave, and then we're looking for a B wave to come back, and then a C wave to move up further, and that's still a possibility off the 4.5 here. This will probably get dragged down to the by the cash market on the next opening. Monday's a holiday, by the way. So, but in this little move here, I can see that we've got this sort of A, this B, and this C down to this point here. But we can see 5 waves in here in terms of the 1, the 2, the 3, the 4, and the 5 there. So that technically should be there. So if we do get a 5th wave that comes down through here, it starts to give us. If we get a 5-wave structure down through here, then a 3-wave back up, then we'll be going down further there as well. So, look, either way you look at it, this is the line in the sand, the 4-5, and that will be the same on the index as well. The FTSE is the same as as well. Let's take this off here. So. I felt we've tracked this market quite well, actually. First of all, the 5-8 here has been the support area here, and we had a very clear 5 waves coming down through here, so that was pretty easy to sort of pick and work out. And then we're looking at the 3-wave counter trend that was moving up through here. And finding resistance, and then we're getting this nice move down through here now. So in this move coming down through here, it's also quite clear as well in terms that we've got down for wave 1, back for wave 2, and then we've got down for wave 3 here, and inside wave 3 here you can also see 5 waves down here, back down for 1, back for 2, there'll be 5 waves in here, 3, 4 and 5, and very nice clear 5-wave structure. Back up for 3 waves here, so that can be wave 4, but wave 4s normally aren't that simple, so what can happen here is that can just be the A wave, we can get the B wave down to here, C wave back up through to here, and then down for wave 5 here to make wave 1. So that may be at the 572 there, which is a bit of a logical number, but either way we would be looking for a rally back up, an ABC rally back up, which is a 3-wave structure of 5 waves in the A wave, 3 in the B, and 5 in the C to make wave 2. I've put it at 5-8 here because that's where the supply is now, the resistance. So that 5-8 through here, that will act as a, because that's been knocking on there like that, it really makes that a strong resistance point. So we'll be looking for the first low below the level, and then we're looking at the retest to the level there. Now the 772 is going to be a strong number as well, so it may not even come back up to the 5-8. That's why I've just drew the line here to the 72 level, and it may fail from there. So if you're looking for a short position, yes, okay to scalp in amongst all of this here, but the next decent trade out of this would come from this move coming down through here. So we can look to short around the 772 level to take that trade to the downside. And it doesn't matter if we're wrong. If something happens that that we are wrong and we find support on the 5-8, well then that's fine. We'll look at that and we'll go to the long side. So it's just trading support and resistance, and the wave count can help us get on the right side of the market. Okay, for the drivers, we're looking at they're all pretty sort of simple, except for gold and the Australian dollar are kind of in the same boat a little bit, and I mentioned that in the early bird. And what I meant by that is that this particular structure that's coming down through here at the moment, let's open that up a little bit, can still be a corrective wave. All of this here can still be corrective, and we can go to here and we can still move up. Okay, so what we need to see play out here is that we've got down for wave 1 here, and we've got an A and a B and a C for wave 2 here. We've got the nice strong 3rd wave down through here. We've got the 4th, and we should get a 5th. So we're going to get that either way. So we should see a bounce off around the 520, and we should, in both directions, we should see a move back up to the 530. And yes, we will see a reaction back down to probably the 525 here. Back in like that, but this is where it gets separated here at this particular point in the structure here. So what will happen from this point, once we get to this point here, it will either move up from there into a larger bullish pattern and take out that high up here, or we're going to be seeing this as resistance, and then this is resistance, and we'll be moving down from that point there. So we need to allow this five-way structure to unfold through here and allow it to go back and retest supply there, and then react at that supply, find support perhaps on the 25 here, 15.25, and we'll see what it does from there. So we'll take that position, whatever it is from there. Long trades would be support on top of subgroup 1 there, and short trades essentially would be under the 15.20 here, but we may be able to get to that earlier. But whatever, if it is to the bear side, we're still going to see the medium level here, 1500, bounce off that. We'll see bounces all the way down through here actually. The some of the driving aspects to this is that the US dollar index, or the US dollar, is going up strong, so traders will simply swap gold for dollars. The other bearish aspect to it fundamentally would be that that the gold is following or is in line with stock and the euro, and not that that's always the case, but they can run together for 2 weeks and then they can run in a different direction for 2 weeks. But if they are working together or not working together, a bit like not working together would be, say, the oil and the CAD. So if these ones are working together with stock, well, then that will help us. And if that is the case, then we'll be seeing gold come further down. Okay, the oil market here. Working chart's a bit messy, but look, we're talking about this triangle pattern that was coming in through here on Friday, was it? And it's a really nice, as messy as it is, it's actually a really good Elliott triangle, in that an Elliott triangle has got 5 waves and labeled A, B, C, D, and E. And in each of these wave structures, there would be 3 waves. So there's an A into here, and a B to here, and a C to there for the A, the B, the C for the D, and A, B, and C for the C wave here, the A, B, and C for the D, and the A, B, and the C for the D, and diminishing into a particular point here. So if we get a breakout from here, we'll know where we are. And if we do get a breakout to the downside here, is normally on a technical level we could take Richard Wyckoff's point of view that the distance across here in time we can square with price on the way down. The normal traditional way of doing things is taking this particular length here and sort of adding it down through here as well, and there'll be some sort of equality relationship in this length and the next length, or perhaps the 61.8 relationship in there. But while we're under the level here, the situation is bearish. But however, you can see how we've actually come through the 100 here. We haven't actually had the retest yet, so I'm sure that from the 98 sort of area here, we'll get some sort of retest back up. We're looking for 5 waves down, by the way, in terms of 1, 2, there'll be 5 waves in here, 3, 4, and 5 down to here. To make wave 1, we'll look at a ABC wave 2 to come back here. If that rolls over and fails from here, that's where the short would be. You want to see that 100 is built as the resistance. It may go higher than that. That 2 may be up here. Simply is that the people that bought here, they will become the sellers, and they will want to break even, so they'll wait till it gets further up here, but they'll all sort of race in and try and grab their piece of the cake quickly, which will bring all the supply and the sellers down to hit them. So we'll see how we go into this area here, but just be careful until this is actually complete here. The copper markets here, it's, well, you know, we've been looking at it as wave 4 here. We've seen this come down through here. I did panic a little bit here and think that we might have a bullish scenario, but we need to find support on the 415 first. That didn't really occur, so we're still in line with the count moving down. We felt that there could be this wave 1 coming down to here, wave 2 to here, and looking at a wave 3 unfolding, you know, much further down through here. But also just looking at, because we're above support here on the medium level here 4, I'll have to consider the move down as an ABC in terms of down for the A wave, back for the B, and 5 waves down for the C wave, which I figured was here. Now, the situation here now is that it's not looking that good for an ABC correction. Yeah, of course, that could be the C wave here, because we can have down for wave 1, back for wave 2, down for wave 3, then an A and a B and a C for wave 4, a basic flat correction, and down for 5, which will be here. Look, we'll see how we go. It doesn't really matter anyway, but we will see a bounce off the 400 anyway, but we'll just see how this goes back up. We can say now that the 410, was had the most volume turned over, really is where the resistance is going to be now, plus the overhead trend line and this and that. So it's really locking it in low here. So any bounce back up through here, we'll just see how that pans out. But if that's going to fail, from here and eventually find the 400 as resistance here, then the material sector for Australia, BHP, AGO, all of those will really fall out of bed from that stage there, and LME would be the 9,000 as well, being retested as resistance there. Just sort of fundamentally speaking, as I mentioned, the early bird there, the LME warehouses are being stockpiled with copper, with the expectation of Chinese buyers to take up that stock, but that's not the case. They're not taking it up, and the stockpile's building, and this is moving to the downside here, and that was a bit the same on the oil as well. OPEC couldn't have a civil conversation, so the Saudis had to come in and offer supply, which has pushed the market under the 100 there. So look, the major drivers here are looking in a weak situation, and also the currencies are as well. So when we look at flicking through here, when we're looking at the US dollar index, which is an index of a basket against the dollar against a basket of European currencies, about 6. I think there may be more included. I haven't read up lately, but central to all of that would be the D-mark, the old D-mark, really, the German economy there. So it's really about Germany's currency and its policies and so forth against the US dollar here, and obviously the euro on the flip side. But what we were looking for here is calling the wave 2 low in at this point here and watching it build from up this point here. So the 75 is a level here. So we've got 73, 75 and 78. So and then we've got 80 as the major level. So support on 75, it should move up to 75. It should have some sort of corrective pattern across the 75. It'll come up here, come back, get up top there, come back and do its thing across here. But if and once it finds support, then we can look for it to move up. But what I wanted to point out is that 75 is a real pivot point in the market in terms of time and price, and if support is found on here, we can naturally then look to 80, which is a major trading level, and 8 is a profit-taking number. So that also means that the next level up through here being minor would be 78, and 78 would also be a profit-taking level as well, but a minor level. But there is lots of other little levels on the way up through here, and we'll look at those as we go. But what we are seeing here now, we're seeing a nice strong impulse wave unfolding to the upside, and what we need to see is a very clear 5-wave structure in place to be able to preempt prices to move above the 80, which is on the cards, but we need the evidence first before we call that. But we'll trade what we see in the meantime. So while this is going up, the mirror to this would be the euro doing its thing, and pretty much sort of on the money here in terms of looking for the impulse wave to the downside, calling the last high in as the top of the whole rally going up. So we've been looking at wave 1 here, wave 2 pulling back up, and then wave 3 unfolding to the downside. So we'll see this come down to the 142 area down through here. You'd need to look at the charts to sort of look at the Elliott wave count, but you should be able to sort of work that out a little bit too as you go there. So the 43 is what you really need to navigate at the moment there. And you can see here that, say from this point high here, you can see that we've come down in 5 waves through here for wave 1. We've come back for wave 2 here. Yep. And then we're going into wave 3 down here. So we're looking at a wave 4 correction within here. So in this structure coming down through here, we've got down for 1, back for 2, we've got down for 3, back for 4, and down for 5. So we're looking at a low there. If we look at this on a 2-minute chart, it'll probably be a bit clearer. That's it on a 2-minute chart. So you can start to notice things in here. You can notice that the strong third wave in the middle here. With corrections, if we're in a bear market coming down, well then corrections will be normally in 3 waves, like this one here, the little A, the little B, and the little C. But basically what we've got here, if we look from this point here, we've got that down for 1, back for 2. This would be all the third wave coming down to here, the 4th wave and the 5th wave. So that's 5 waves there in this case here, the 1, the 2, the 3, the 4, and the 5. So this would be the bottom of a structure here. So we're looking at a 4th wave to develop through here. And a 4th wave normally pulls back to the 3rd, 4th wave of 1 lesser degree here. Or we could look at that in terms of a 38.2 retracement level. So we'll just grab the Fibonacci tool there. So it's 38.2% of the 3rd wave, and that's the 3rd wave there. So it can come back up higher to this level up through here, 38. But the euro, as you know, or should know by now, it normally has shallow retracement levels. So it's easier to work with the actual pattern happening at the time, and also the levels as well. So in this particular case here, we're looking at this 143.50 here as being, it was support and now it's resistance. So look, if this market moved up through here, I mean, you would never go long below a level like this. So you would only go long on support. So, and you're always working with the closest, largest number. So if that market pushed up through there, you wouldn't chase it up. You'd wait for it to come back and check. If it checks there and it really finds support, well, then you can use the smaller levels below that to scale in on as they develop support, and then you'd move up and take the money at the certain levels there. So there would be, that's the 72 there. So that should be a little sort of orange number there. So you'd be aware of that 65, 72 and the 80, but you'd be trading to the 72, of course, but moving out at 65. If 72 became support, then you would move back in and go longer again as well. But as it stands at the moment, it's resistance. So any trade setup that you'd be looking for would be on the short side there. Okay, the Australian dollar, excuse me. I just want to have a look. It's got the same thing as the euro happening as well. So you just need to make sure you get all the levels in there and then understand support and resistance and money management. But what I wanted to point out here on the Australian dollar, because this level here, this 105 here, can be because Australian dollar is moving with stock. And the reason for that, it's being driven by the materials sector, and the copper market has a relationship with our dollar, of course. And but the 105 level here would be like using the 4,500 level on the XJO, the ASX 200 or SPY. So I think that it's important at this stage that that these two markets that you bring together and work it from there. So if in the bigger picture here, the 105 becomes the resistance, then you would see our stock market become weaker as well. Okay, so this is, as these markets come down here, this is the first bounce off the level 5, which is a yeah, just 5 is the second strongest number. This is the first sort of hit off it. This is the bounce off it. So this is the second approach to it, all right? So normally on the second approach like this, it's going to go through it. So it means that it's going to go through it and then eventually find it as resistance and then roll over from there. So in terms of trading this for position sizing and or gleaning positions in the market, you're going to have to realize that off the 105 or even the first levels below that, it's going to get messy, and we could also see a bounce back up. But what you're looking for is to really give it time. We'll see it come down, have a bounce, go back up, come back down through it, and then find it as resistance. When it finds it as resistance, starts rolling over, that's when you want to build positions into it. If you're going to go for the longer term to the downside, that's what we'll be looking at. Then use smaller positions and give it more room to move. And we'll be talking about that. But try not to lose money in subgroup 1 of 105 there, okay? Okay, that's really about it, I think. Yeah. Alrighty. Markets are closed on Monday. But put this report out anyway, and we'll do the early bird again as well, and I'll just adjust stocks there. But yeah, markets in the US are very weak, and we essentially need to be net short in the markets. All right, good morning and good luck.